Welcome my dear learners. In the previous video, I told you about the introduction and certain fundamental matters regarding partnership. In this video, we are going to see the preparation of profit and loss appropriation account and capital account of partners. These two accounts are very important in partnership business, because in partnership business there are so many business transactions like other type of businesses. Apart from that, some transactions are there which are carried out between the business and the partners, right? So what are the possible transactions between the business and the partners? We will see that one by one. See here, the transactions between business and the partners. First one is interest on capital. The partners are the owners of the business. They have invested their money in the business. It is called capital, right? The business is utilizing that money to carry out the business. So for that, the business pays interest on the capital to the partners, because the partners have provided the capital. So the business gives interest on capital to the partners. This is called the interest on capital. This is expense for the business. We are making accounts for the business only. That you should keep that in mind. Whatever the type of business it may be, which you are preparing accounts for the business only. So the interest on capital is an expense for the business, right? Then another thing, drawings. Drawings is nothing but if any amount withdrawn by partners for their personal uses, for their private uses, called drawings. They may have right to withdraw money for their personal use. The provision related to the drawings will be in the partnership deed. According to the rule, they will take over. Similar to interest on capital, for the amount withdrawn by partners, that is on the amount of drawings, the partners have to pay interest to the business, because they have withdrawn money, so they have utilized the amount, so the interest should be given by the partner to the business. So this is an income for the business. Then salary to partners. Among the partners, some partners may be working partners. Some partners may actively participate in the management. So for that, the business may give salary or commission to the partners, right? So these items also are expense for the business. Salary given to partners, commission given to partners, they are all expense for the business, right? The interest on loan of partners. As we discussed in the previous video, the business may borrow money from one or few of its partners of the business. In such situation, the business should pay interest to the partners. But this transaction should not be recorded either in profit and loss appropriation account or in capital account of partners, because this is also the interest given to partners loan also as a other expenses. So it should be recorded in the profit and loss account itself, right? These are all the possible transactions between the business and the partners, right? So in partnership business, we are preparing final accounts as other businesses. We are preparing trading account and finds gross profit or gross loss. Then we prepare profit and loss account. There we calculate net profit or net loss. In these two accounts, the incomes and expenditures are brought. There, the income from outsiders and expenses to outsiders are recorded. After the preparation of profit and loss account, another account called profit and loss appropriation account should be prepared. This account is prepared to record the transactions between the partners and the business. All the transactions between the business and the partner should be recorded in the profit and loss appropriation account. Profit and loss appropriation account is also like a profit and loss account. Expenses are to be recorded in the debit side. incomes are to be recorded in the credit side, right? See, I have written the format for profit and loss appropriation account. In this account, first you should write the profit and loss account. That means the net profit calculated in profit and loss account should be recorded in the credit side. If the company earned net profit according to profit and loss account, that should be recorded in the credit side. Sometimes if the firm has suffered by net loss, means that should be recorded in the debit side in profit and loss account, right? Then here these are all the transactions between the business and the partners, of which the interest on drawings alone income for the business, because the interest on drawings is charged to partners. The partners have to pay to the business, so it is income for the business. So it should be recorded in the credit side of profit and loss appropriation account. The other items, interest on capital. The business should give interest on capital to the partners for capital provided by them, so it is an expense for that, so it should be recorded in debit side. Then salary to partners. The business gives salary to partners. This is also expense for the business, so recorded in the debit side. Similarly, the commission to partners. The commission also is given by the business to the partners, so it is also expense, so it should be recorded in the debit side of the profit and loss appropriation account, right? After recording these things, the account should be closed by balancing it. If the total of credit side is higher than the total of debit side, the balance should be recorded in the debit side of profit and loss appropriation account. This is called profit. So that profit should be divided to all the partners of the business on agreed ratio. In this format, I have written the two partners name A and B. This has been written as example. That's all. The profit should be shared among the partners on agreed ratio, agreed profit sharing ratio, right? Sometimes the total of debit side may be higher than the total of credit side. In such situation, the balance will come in credit side. This is loss. This also should be shared among the partners on agreed profit sharing ratio. So this is profit and loss appropriation account. Now we will see the types of capital accounts. In partnership accounts, the capitals can be classified into two, as fixed capital and fluctuating capital. In case of fixed capital, the capital of partners will be maintained and as fixed capital. In other words, there no other adjustments will be made. The adjustments related to the business and the partners will not be carried out in capital account except two. One is additional capital by partners and another one is permanent withdrawal of capital by partners. Only these two items only will be recorded in the capital account. Other items will be recorded in current account, which will be opened separately for each partner, and the other adjustments will be recorded in current account, right? This is fixed capital method. Another one is fluctuating capital method. Under fluctuating capital method, the capital is not fixed. That means it is fluctuating. So capital, additional capital, permanent withdrawal of capital, or any other adjustment related to the business and the partners should be recorded in the capital account itself. No current account is opened here, right? Only the capital account is opened. All the adjustments are recorded in the capital account itself, right? So now we will see how the items should be recorded in these accounts, right? We will see that one by one. First we will see how the items are recorded under fixed capital method. In fixed capital method, two accounts are prepared. One is capital account, another one is current account. In capital account, first we should record opening balance of capital. Capital is a liability, so it shows credit balance. So it should be recorded in credit side, balance brought down. Then this is bank account. This is additional capital. If the partner has brought any additional capital during the year, that should be recorded in the credit side. Similarly, if any partner has withdrawn part of their capital permanently from the business, that should be recorded in the debit side under the heading of bank account. This is permanent withdrawal of capital by partners. So these two items only should be recorded apart from the opening balance of capital. then the account should be balanced. The balance will come, the balance comes in debit side. This is balance carried down, then that should be brought into the balance brought down, right? So this is a capital account under fixed capital method. Then other adjustments between the business and the partner should be recorded in the current account. For that, current account should be opened separately for each partner of the business, right? In this, first we should write opening balance of current account. The opening balance may be debit balance or credit balance, whatever the case it may be. If it is credit balance, in credit side you should write as balance brought down. If the current account shows debit balance, you should write balance brought down in debit side, right? Then apart from that, the transactions between the business and the partner should be recorded. Here you should know a simple concept that some transactions may increase the amount of capital of the partners, some transactions may decrease the amount of capital of partners, right? Generally, the interest on capital, interest on drawings, or salary, or commission to partners will not be transacted in cash. That will be adjusted in capital account, that's all. Some items will increase the amount of capital of partners, that should be recorded in the credit side of current account, right? See, interest on capital. Interest on capital is given by the business to the partner. So it increases the amount of capital, so should be recorded in the credit side. Similarly, salary. Salary is given by the business to partners. So partners' capital account increases, so should be recorded in the credit side. Same like that, commission. Commission also given by the business to partners, that increases the amount of capital, that should be recorded in credit side. Then profit and loss appropriation account. This is nothing but the profit share of the partners. The profit derived in profit and loss appropriation account should be distributed among the partners, that we have seen already. So that also increases the amount of capital of partners. So this also should be recorded in the credit side, right? Then drawings. Drawings is the amount withdrawn by partners for their personal use, right? So the withdraws, so that amount will reduce the amount of capital. So I have recorded in the debit side. Similarly, interest on drawings. In case of interest on drawings, the interest is charged on partners. Partners have to pay to the business. So it will reduce the amount of capital of partners. So it should be recorded in the debit side. So after recording these things, the account should be closed. In that situation, if credit side total is higher than the debit side total, the balance will come in debit side. So it should be written under balance carried down. That should be transferred as balance brought down. In sometimes, the total of debit side may be higher than the total of credit side. In that situation, the balance will come in credit side. So the balance brought down should be written in debit side, right? These two accounts are to be prepared under fixed capital method. Then fluctuating capital method. In case of fluctuating capital method, only one account is prepared, called capital account. All the adjustments between the business and the partners should be recorded in the capital account itself. See here, first you should record the opening balance of capital in the credit side. Similar to the current account, whatever the items increases the capital of the partner should be recorded in the credit side. Whatever the items reduces the balance of capital should be recorded in the debit side. See here, similarly, interest on capital, salary, commission, profit share are increasing the amount of capital, so they should be recorded in the credit side. The items, drawings, interest on drawings, and if there is any loss share means, that also will reduce the capital balance, so they should be recorded in the debit side. So after completing this, the account should be closed by balancing it. If total of credit side is higher than total of debit side, the balance will come in debit side. So it should be recorded as balance carried down, that should be brought into the credit side, called balance brought down. So this is the account prepared under fluctuating capital method, right?